Hello everyone, this is Juan Sarmiento and today is Friday, April the 29th. Well, the market seems to be playing games with us. I would have thought that it would have been much lower by now. This is a 4-hour chart on the, let's put a daily chart on the Dow Jones. Yeah, you can see that is try to go above the Ichimoku cloud. It made a new high here, temporary so, and then it's begun to go down. How about we use here the price tool and check this. Okay, this is the previous high, and you have another previous high. You can make these levels as important levels because they represent resistance. And here's another one. So this one amounts here to a double top, and then the markets came down. And so then next we have these lows here, which should be tested or would be tested. I would expect them to be tested. Okay, and today, yesterday and the day before, we seem to have a reversal, which really surprised me. But here we go back down again today. You can do that same evaluation with the SPY. This is the VIX. VIX are hitting. If the VIX is around 30, that's pretty high. Okay, I would say a normal VIX would be around 20. Okay, like that. That will be our normal. Let's put a level here. Our normal VIX, which means we are at a high VIX right now. Okay, and this tends to go up and down very quickly, and usually reflects what the market is doing. This is the Nasdaq. You can see the channel here. That's important. We have done this in the previous days. You check a previous high and the more recent high, and you make a channel, then draw a parallel line, and that's your channel. Okay, so you would think that the lows could be tested next, and the leading cloud is red, which means bearish. Okay, you see how it briefly got into yellow as the market went to a new high here and created that channel, but now it's red again. So I'm quite bearish, but you never know, these things may reverse. So I love to do my charts and all that, but in the end, it's anybody's guess what the markets would do. Nobody really knows. Here's the SPY, the S&P 500, and here I have the same design. Okay, from the high here, the new high here, lower high, and then you draw a channel based on this previous low, and then you say, okay, I don't think that the market will go to a new high until this low is tested. Then it may snap back up. But okay, so what do? I am very bearish right now, and I want to say that straight out. Okay, because despite the two previous days highs, I think that the markets are going to go down, and I have this bias, and I have all these positions are to expire, the short portion, next week. And so let's examine each one of them with the idea that I would rather wait a couple of days more, because I think even today the market might make a new low, even today. Okay, right now we are in the middle of the day, so that might not happen, but it may well be that you get a collapse in the next in the few hours remaining in the markets. I would say the last 2 hours you may have strong move down. So based on that, I'm going to show you this variation of my style. Normally I say follow the rules no matter what. Okay, keep that in mind. So in this particular situation, when I am almost positive that the market will go further down, even though I tell you, don't trust that judgment, try to neutralize your positions as much as you can, I think that there is a little bit of a bias to the downside, or I have this bias to the downside, and I'm going to look at my positions on that end. What happens is, because we have new highs on the VIX, I don't think I will be entering new positions. So I don't really want to take my existing positions off the table when they could be making new lows. And then I have a lot of capital and the markets will hit new lows and I don't really have positions. I'd rather risk that way to the downside. And based on that, you will see, okay, let's examine, and then I tell you what I intend to do and why. Okay, analyze, let's look. This is all based on my bias and experience over the years, and I want to give you an alternative to the just following the book that I say, oh, you are supposed to exit the trade because you have a week to expiration and you're not making money, so get out. Okay, so starting with Adobe here, you see that I have a loser here of $500. That's not going to break my budget. In fact, I think it's closer to neutrality here, to almost break even. That's why I'm considering, well, what happened if I close the position? Well, then I have one trade less and then I'm not going to replace it. And I want to have that trade right now because I think the market will make a new low very quickly, very soon. Admittedly, I'm not positive, and these things, I'm basing it on my technical analysis, which has been shown to be wrong. And this is why I trade the Gini trade, because I think I don't need to have that judgment. Okay, so then I say, okay, May 6th for this. All right, that's next week. I could say, well, let's wait until Monday, let's wait until Tuesday, or let's wait until Friday. Okay, and what happens here is that, well, if I wait until Friday, which will be my next available day, then in a real account, I could have my short put assigned because it's $60 below the strike price. Okay. So I'm going to say something here, okay? We could do the rolling over. We can roll only the put, and the call would expire worthless, and then I could add another call next week, another short call next week, and then I let it expire because it's 60 points ahead. Okay, let's see if I do the rollover on the put side only. Why would I do that? Well, what if the market bounces? Look at what I have here. I have -4, my delta. If I do the rollover, it becomes -8. It's a little better, no change there. But if the market suddenly jumps back and reacts and snaps back up, then my short call could expire, and then but my next month call would be more worth it. Okay, here I would say not short the May, but short a week more, like say June 10th. Okay, and then when I do that, I have a delta of -19. All right, keep in mind that I'm extending a loser. Okay, it's right now 394. Look at the chart again. Do you think that Adobe will snap back? Well, I think it's breaking to a new low even as we speak. And if it bounces back up, we'll be fine because we are more nearly neutral. And if it bounces back up and hits this 460 by next week, so much the better. Okay, so you can do whatever you like. If you close the position, you're quite all right. I'm doing this because I think the market will continue to go lower. I'm not exposing myself to more additional risk because if it bounces back up and lands here, I suddenly have a positive trade. If it goes lower, volatility would increase further out and make me my loser into a winner. Okay, so I'm gonna do that. Do the rollover of the put side only. Okay, confirm and set. I'm being as honest as I can because the rules say you're supposed to close this. Why? Because it's a loser. 375. Okay, let's see if it gets filled. Let's go to Costco. Very similar trade, slight loser, is already here considerably lower. 600 was my strike price, and it's May 6th. So I'm going to do exactly the same thing. I'm going to roll over only the put side. Analyze rolling. You might say, why don't you do the call side as well? Because this 600 call is certainly going to expire worthless, almost certainly. Okay, so if the market goes up and hits 60 by next week, which is, you know, unlikely, I could sell the June 10 call at a better price. Okay, if it goes up at all. Okay, so that's what I'm going to do, and doing this will increase my deltas by just a little bit, from minus 11 to minus 25. Let me make sure that I'm doing this right. June 10th, May is what I'm closing. Okay, let's move on to Nike. By the way, this is the position as I copied it. Okay, and you can see this is positive. Okay, this I would do without hesitation, but May 13 is the expiration, so we're gonna wait until next week. Okay, because that's what, 15 days to expiration, more than 7. So this I don't need to do anything. And then Oracle. You can see that is the exact same position as I entered. Let's get this out of the way. And here I have my PNL is minus 300. So it's the same thing, okay? Same thing as Adobe and Costco. So I'm going to roll over the put side only. And this goes to May, June. Okay. And this will turn my delta from 141, which is really high, to something more delta neutral, close to neutrality. Okay. And as you can see, nothing is happening. Let's look at the markets. Yeah, they continue down. Okay, so I'm gonna go to the monitor tab and try to adjust my bid and ask so this gets filled. Cancel replace and simply unlock it. Do the same for every position. Cancel replace, unlock it. No. This is different because cancel replace, I want to actually lower it by 5 points. And I will keep on doing this until they get filled today. Okay. I'll keep on doing that. by 5 cents or so increments or decrements, I guess you call it. And that's all there is to it for today, I guess. I don't really have any new trades, and considering the volatility the way it is right now, it would be risky to enter new positions. Okay, they would have high volatility and you don't want to touch that. All right, that's all for today. Thank you very much. And as I said, I will make sure that these positions, these rollovers get done. Thank you very much. Bye bye.